Trading Psychology Playbook by Doug Hirschhorn, Ph.D. Book summary in English. Hey everyone, and welcome back to Powerbooks. If you're here to unlock your full potential and achieve true mastery, you know that the greatest leverage often comes from within. And in the high-stakes world of trading, that couldn't be more true. Today, we're diving into an absolutely essential guide for anyone serious about consistent profitability, Trading Psychology Playbook by the brilliant Doug Hirschhorn, Ph.D. Have you ever had a perfect strategy, only to watch your emotions sabotage your trades? Or found yourself making the same costly mistakes over and over, despite your best intentions? This isn't just a book about market analysis. It's a practical playbook for mastering the most crucial variable in your trading success: your mind. Hirschhorn unveils how to identify and conquer the emotional demons of fear, greed, and hope, overcome pervasive cognitive biases, build unshakable discipline, cultivate laser-sharp focus, and develop the unyielding confidence needed to thrive in any market condition. Get ready to discover why psychology truly trumps strategy and how to systematically train your brain for consistent peak performance. So if you're ready to transform your trading by transforming your thinking, hit that like button, subscribe to Powerbooks if you haven't already, and let's unlock the psychological edge with Trading Psychology Playbook. Chapter 1, The Mental Edge: Why Psychology Trumps Strategy. In this foundational chapter, The Mental Edge: Why Psychology Trumps Strategy, Doug Hirschhorn, Ph.D., immediately challenges the common misconception among traders that sophisticated strategies, complex indicators, or superior market analysis are the primary determinants of success. He likely establishes the core premise of the entire playbook, that while strategy is necessary, the psychological component, the mental edge, is ultimately far more critical and accounts for the vast majority of a trader's consistent profitability, or lack thereof. Hirschhorn probably presents compelling arguments or hypothetical scenarios to illustrate why even brilliant, well-researched trading plans can fail if not executed with the right psychological fortitude. He might explain how destructive emotions like fear, greed, impatience, and overconfidence subtly or overtly sabotage rational decision-making, leading to impulsive entries, delayed exits, poor position sizing, and a complete breakdown of discipline. This chapter emphasizes that without a strong psychological foundation, even the most robust trading system is rendered ineffective. Its purpose is to reframe the reader's understanding of trading, shifting their focus from solely external market factors to the indispensable internal mastery required to navigate the volatile world of finance successfully. Key takeaways. 1. Psychology is paramount. This chapter establishes that a trader's psychological state and mental discipline are far more influential than any trading strategy in determining long-term success. 2. Challenging misconceptions. It debunks the myth that trading is purely about analytical prowess, highlighting why many intelligent individuals with good strategies still fail. 3. Impact of emotions. Hirschhorn likely illustrates how common trading emotions, fear, greed, impatience, directly undermine rational decision-making and lead to costly errors. Setting the foundation. The chapter serves as a crucial introduction, convincing the reader that mastering their mental edge is the essential first step toward becoming a consistently profitable trader. Chapter 2, Unmasking Your Trading Demons: Fear, Greed, and Hope. In this crucial chapter, Unmasking Your Trading Demons: Fear, Greed, and Hope, Doug Hirschhorn, Ph.D., directly confronts the most potent psychological adversaries that sabotage a trader's performance. He meticulously breaks down how these fundamental human emotions manifest specifically within the trading environment and lead to consistent, costly errors. Hirschhorn likely defines each demon: fear, which can cause premature exits from winning trades, hesitation to enter valid setups, or panic selling; greed, which drives overtrading, excessive risk-taking, over-leveraging, and holding on to profitable trades for too long until they turn into losses; and hope, which often manifests as irrational wishful thinking, leading traders to cling to losing positions, ignore stop losses, and average down into failing trades against clear market signals. The chapter probably illustrates with vivid examples how these emotions aren't just feelings, but powerful forces that dictate irrational actions, causing traders to deviate from their strategies and undermine their own success. Hirschhorn emphasizes that true psychological mastery isn't about suppressing these emotions entirely, but rather about unmasking them, recognizing their presence, understanding their triggers, and developing strategies to manage their influence. By identifying these primal emotional responses, traders can begin the critical work of separating their feelings from their decisions, a vital step towards disciplined and rational execution. Key takeaways. 1. Core emotional adversaries. This chapter identifies fear, greed, and hope as the primary emotional demons that undermine rational trading decisions. Behavioral manifestations. Hirschhorn explains how each emotion translates into specific, costly trading errors, such as premature exits, overtrading, or holding on to losing positions. 3. Intertwined influence. The chapter likely highlights how these emotions often interact, creating complex psychological traps for traders. 4. Awareness is first step. The core message is that recognizing and understanding these emotional triggers is paramount for gaining control and preventing them from dictating trading actions. Chapter 3. The Discipline Play, Building Unwavering Consistency. In this pivotal chapter, The Discipline Play, Building Unwavering Consistency, Doug Hirschhorn, Ph.D., shifts from identifying emotional challenges to providing actionable strategies for cultivating the cornerstone of trading success, discipline. He likely defines discipline not merely as willpower, but as the consistent, unwavering adherence to a predefined trading plan, encompassing entry and exit rules, position sizing, and stringent risk management, free from emotional interference. Hirschhorn probably acknowledges the immense psychological difficulty of maintaining discipline, linking it directly to the emotional demons discussed in the previous chapter. The chapter likely presents a series of plays or practical techniques designed to forge this unwavering consistency. These might include the vital importance of having a meticulously documented trading plan, the power of implementing rule-based trading to minimize discretionary errors, and strict adherence to stop losses as a non-negotiable aspect of self-preservation. Hirschhorn probably emphasizes establishing firm daily routines and rituals, utilizing trade journaling for accountability and self-monitoring, and practicing mental rehearsal or visualization to reinforce desired behaviors. The core message is that consistent discipline, more than any other factor, is the direct pathway to consistent results, as it eliminates the costly, impulsive errors that derail even otherwise profitable strategies. Key takeaways. 1. Discipline as the cornerstone. This chapter establishes unwavering discipline as the most critical trait for consistent trading success beyond mere willpower. 2. Practical plays. Hirschhorn provides actionable strategies for building discipline, such as developing a detailed trading plan, adhering to rules, and implementing strict risk management. Counteracting emotions. It explains how discipline serves as the primary defense against the emotional pitfalls, fear, greed, hope, that lead to inconsistent and losing trades. 4. Consistency. Through adherence. The core message is that consistent application of a disciplined approach directly translates into consistent trading performance, minimizing errors driven by emotion. Chapter 4. Beyond the Charts, Understanding Your Cognitive Biases. In this crucial chapter, Beyond the Charts, Understanding Your Cognitive Biases, Doug Hirschhorn, Ph.D., shifts focus from emotional discipline to the systematic mental errors that often derail even well-intentioned traders. He likely explains that while technical and fundamental analysis provide market insights, a trader's perception and judgment are constantly and often unconsciously influenced by cognitive biases, ingrained patterns of thinking that lead to irrational decision-making. Hirschhorn probably details several key biases prevalent in trading. For example, he would cover confirmation bias, where traders selectively interpret information to confirm existing beliefs, ignoring contradictory evidence that could save them from a losing trade. He might also delve into loss aversion, illustrating how the pain of a loss is psychologically more potent than the pleasure of an equivalent gain, leading traders to hold onto losing positions too long or cut winners too soon. Other biases discussed could include anchoring bias, where an initial piece of information, like a past price level, disproportionately influences subsequent decisions, or overconfidence bias, which leads traders to overestimate their abilities and take on excessive risk. The chapter's core message is that recognizing these inherent mental shortcuts is vital. By understanding how our brains are wired for these errors, traders can proactively implement strategies to mitigate their impact, thereby moving beyond superficial chart analysis to address the deeper, often hidden drivers of poor performance. Key takeaways. 1. Systematic thinking errors. This chapter introduces cognitive biases as ingrained mental shortcuts that lead to predictable, irrational errors in trading judgment, separate from emotional impulses. 2. Key biases in trading. Hirschhorn likely details common biases such as confirmation bias, loss aversion, anchoring, and overconfidence, illustrating their specific impact on trading decisions. Impact on performance. It explains how these biases lead to costly mistakes like ignoring valid signals, holding losers, cutting winners, or taking excessive risk. Awareness as mitigation. The core message is that simply understanding and identifying these cognitive biases is the first crucial step towards consciously counteracting them and making more rational, data-driven decisions. Chapter 5. The Winning Mindset, Cultivating Confidence and Focus. In this empowering chapter, The Winning Mindset, Cultivating Confidence and Focus, Doug Hirschhorn, Ph.D., transitions to the proactive development of essential mental states that enable peak trading performance. Having addressed the pitfalls of emotions and biases, Hirschhorn now focuses on how traders can systematically build confidence and sharpen their focus, two pillars of a robust winning mindset. He likely distinguishes between genuine, process-based confidence, derived from preparation and disciplined execution, and dangerous overconfidence, rooted in ego or recent wins. The chapter would explain how true confidence reduces hesitation, promotes decisive action, and fosters resilience in the face of market volatility. Hirschhorn probably delves into various techniques for cultivating these mental states. For example, he might emphasize positive self-talk and affirmations to reinforce desired beliefs, as well as visualization exercises to mentally rehearse successful trade execution and adherence to rules. The importance of focus would be explored, detailing how to eliminate distractions, maintain presence in the moment, and direct mental energy towards high-value tasks rather than noise. This could involve pre-trade routines or mindfulness practices. The core message of this chapter is that a winning mindset is not innate, but meticulously cultivated through deliberate practice, enabling traders to execute their strategies with clarity, conviction, and unwavering attention, thereby unlocking their full potential. Key takeaways. 1. Cultivating positive states. This chapter shifts to actively building desired psychological attributes like confidence and focus, essential for optimal trading performance. 2. True confidence versus overconfidence. Hirschhorn likely distinguishes between healthy, process-driven confidence and detrimental, ego-driven overconfidence. 3. Techniques for confidence. It provides actionable methods for building confidence, such as positive self-talk, visualization, and focusing on process. Enhancing focus. The chapter emphasizes strategies for improving concentration, minimizing distractions, and maintaining a clear mental state during trading. Proactive mindset development. The core message is that a winning mindset is a deliberate construct built through consistent psychological work to enable disciplined and decisive execution. Chapter 6. Emotional Control in Real Time, Techniques for High-Pressure Trading. In this practical chapter, Emotional Control in Real Time, Techniques for High-Pressure Trading, Doug Hirschhorn, Ph.D., shifts focus to the tactical management of emotions precisely when it matters most, during live market action. He likely acknowledges that while understanding emotions is crucial, as discussed in Chapter 2, the true test of a trader's psychological mastery comes under the intense pressure of volatility, rapid price swings, and significant profit or loss fluctuations. Hirschhorn probably helps traders identify their personal physiological and psychological tells that signal emotional activation, such as an increased heart rate, shallow breathing, or a sudden urge for impulsive action. The chapter then delves into a playbook of immediate, on-the-spot techniques for regaining composure and maintaining objectivity. These could include specific breathing exercises, example, box breathing, to calm the nervous system, the importance of taking brief tactical breaks away from the screen to reset one's mental state, or implementing predefined circuit breakers to interrupt emotional spirals. Hirschhorn might also discuss using refocusing questions to recenter one's thoughts on the trading plan, or quick visualization methods to reinforce desired behaviors under stress. The core message is that controlling emotions in real time is a trainable skill, and by employing these practical techniques, traders can prevent impulses from derailing their strategy and maintain decisive, rational execution, even in the most demanding market conditions. Key takeaways. Real-time challenge. This chapter addresses the unique difficulty of managing emotions during actual, high-pressure live trading sessions. 2. Identifying emotional cues. Hirschhorn likely guides traders in recognizing their personal physical and mental signals of emotional activation. 3. Actionable techniques. It provides a playbook of immediate strategies for emotional regulation, such as breathing exercises, brief breaks, and mental circuit breakers. 4. Maintaining objectivity under pressure. The core message is that proactive emotional control through practical techniques is essential for making rational decisions and executing plans effectively amidst market volatility. Chapter 7. The Recovery Playbook, Bouncing Back from Losses and Drawdowns. In this critical chapter, The Recovery Playbook, Bouncing Back from Losses and Drawdowns, Doug Hirschhorn, Ph.D., addresses one of the most challenging yet inevitable aspects of trading, the psychological impact of losing trades and extended periods of poor performance. He likely begins by normalizing losses, emphasizing that they are an unavoidable part of the trading profession, even for the most successful, and that the true measure of a trader lies in their ability to recover. Hirschhorn probably dissects the common emotional responses to losses, such as frustration, anger, self-doubt, and the dangerous urge for revenge trading, explaining how these can quickly lead to a detrimental spiral of irrational decisions. The chapter then provides a practical playbook of strategies for both emotional and strategic recovery. These might include immediate techniques for emotional processing, such as stepping away from the screen, engaging in brief physical activity, or dispassionately journaling the trade to extract lessons without dwelling on regret. For drawdowns, Hirschhorn would likely recommend concrete actions like scaling down position size to reduce risk and allow for mental breathing room, thereby rebuilding confidence through smaller, more manageable wins. He would emphasize the importance of focusing rigorously on process over outcome during recovery periods and the need for self-compassion and patience. The core message is that effective recovery isn't just about technical adjustments. It's a deliberate psychological process crucial for preventing losses from turning into career-ending psychological collapses, transforming setbacks into opportunities for growth and resilience. 1. Normalizing losses. This chapter establishes that losses and drawdowns are inevitable in trading, shifting the focus from avoiding them to managing their psychological impact. 2. Addressing emotional aftermath. Hirschhorn dissects common emotional responses to losses, anger, self-doubt, revenge urges, and explains how these can lead to further irrational behavior. 3. Practical recovery strategies. It provides a playbook of actionable techniques for emotional and strategic recovery, such as taking breaks, objective journaling, and scaling down risk. Building resilience. The core message is that mastering the psychological recovery process is essential for preventing trading spirals, fostering mental fortitude, and ensuring long-term sustainability in the markets. Chapter 8. Building your personal trading rituals, preparation to performance. In this highly practical chapter, Building Your Personal Trading Rituals, Preparation to Performance, Doug Hirschhorn, Ph.D., focuses on the power of consistent routines to optimize a trader's mental and emotional state, ensuring peak performance. He likely emphasizes that while understanding psychology is vital, translating that understanding into consistent action requires structured, repeatable behaviors, or rituals. Hirschhorn probably explains that these rituals serve as powerful anchors, helping traders transition into an optimal state for trading and maintain it throughout the day, minimizing the disruptive influence of random emotions or distractions. The chapter would break down the creation of rituals across different phases of the trading day. This might include pre-market rituals, such as a disciplined review of the trading plan, mental rehearsal of setups, or physical preparation like light exercise to ensure sharp focus. During the trading session, in-market rituals could involve scheduled breaks to reset, specific breathing exercises before high-stakes entries, or constant self-monitoring to ensure adherence to rules. Finally, post-market rituals would cover the crucial process of objective trade journaling, emotional debriefing, and mentally disengaging from the market to prevent carryover stress. Hirschhorn's core message is that by meticulously designing and consistently adhering to personalized rituals, traders can build an environment of unwavering discipline and focus, transforming theoretical knowledge into consistent, high-level performance. Key takeaways. 1. Power of routines. This chapter highlights the critical role of consistent, personalized rituals in establishing and maintaining an optimal psychological state for trading. Phased rituals. Hirschhorn likely outlines distinct rituals for the pre-market, in-market, and post-market phases, each designed to enhance focus, discipline, and emotional regulation. Mental and physical preparation. The chapter emphasizes that effective rituals involve both mental preparation, e.g. visualization, plan review, and physical aspects, example breaks, healthy habits. Consistency through structure. The core message is that by building and adhering to a playbook of daily rituals, traders can significantly reduce emotional interference, reinforce discipline, and consistently execute their strategies for peak performance. Chapter 9. Sustaining Peak Performance, the Long Game of Trading Psychology. In this concluding chapter, Sustaining Peak Performance, the Long Game of Trading Psychology, Doug Hirschhorn, Ph.D., shifts focus from immediate psychological techniques to the ongoing commitment required for enduring trading success. He likely emphasizes that achieving a psychological edge is not a one-time fix, but a continuous journey, positioning trading as a marathon, not a sprint. Hirschhorn probably addresses the critical challenge of avoiding complacency, explaining how even consistent profitability can lead to overconfidence or a relaxing of discipline, which can quickly erode past gains. The chapter would stress the importance of continuous self-assessment and adaptation, encouraging traders to regularly review their psychological state, identify emerging biases, and adjust their mental strategies as market conditions or their own trading style evolves. It might delve into strategies for managing psychological fatigue and burnout, recognizing that the mental demands of trading are immense and require deliberate practices like scheduled breaks, hobbies, and strong boundaries between trading and personal life. The core message is that true mastery in trading psychology means cultivating a growth mindset, where every outcome, win or loss, is viewed as a learning opportunity. By consistently applying the principles learned throughout the playbook and committing to ongoing personal development, traders can not only achieve peak performance, but sustain it over the long haul, transforming their trading into a fulfilling and enduring career. Key takeaways. 1. Trading as a long game. This chapter emphasizes that psychological mastery is an ongoing process, crucial for sustaining performance over an extended career, not just for short-term gains. Avoiding complacency. Hirschhorn likely addresses the dangers of overconfidence and relaxed discipline that can follow periods of success. Continuous adaptation. It stresses the importance of regular self-assessment and adapting psychological strategies as market conditions or personal challenges evolve. 4. Managing fatigue and burnout. The chapter might offer advice on preventing psychological exhaustion through self-care and maintaining a healthy work-life balance. 5. Growth mindset. The core message is that long-term success is built on continuous learning, self-improvement, and viewing every experience as a stepping stone to greater psychological resilience and performance. And that wraps up our deep dive into Trading Psychology Playbook by the brilliant Doug Hirschhorn, Ph.D. What an essential guide for anyone truly committed to consistent success in the markets. We've explored how mastering your inner game, identifying your trading demons, building unwavering discipline, conquering cognitive biases, cultivating confidence and focus, and recovering from inevitable setbacks is the ultimate leverage. This isn't just theory, it's a practical playbook designed to help you execute your strategies flawlessly and navigate the high-pressure world of trading with unparalleled mental strength. If you're ready to transform your trading by transforming your mind, I highly recommend getting your own copy of Doug Hirschhorn's Trading Psychology Playbook. It's an indispensable tool for developing the psychological edge that truly sets professional traders apart. You can find the link to purchase it in the description below. Here at PowerBooks, we firmly believe knowledge is not power. The application of knowledge is power. And this playbook provides the exact knowledge and the actionable steps you need to apply to achieve consistent, disciplined, and profitable trading. If you found this exploration valuable and are ready to apply these insights to your own trading journey, make sure to hit that like button, subscribe to PowerBooks, and ring that notification bell so you don't miss our next empowering episode. Remember, the market reflects human emotion, and those who master their own emotions will always have the ultimate edge. Continue to build your psychological playbook, stay disciplined, and keep unlocking your extraordinary potential. Thanks for tuning in, and we'll see you next time on PowerBooks.